Hi, Amy.
Looks like we got it working. So we got 6 people online.
Okay, good.
I didn't know if you wanted to start over real quick, but because
Okay.
I wasn't going. Yeah,
Um, we have the proof of notice, we have a quorum of officers, and, I was just, talking about the emergency meeting on, May 12th, where, I was appointed president, and I'm gonna be doing the best I can. And I'm anticipating that everybody here is gonna help me. We have, an active board. We've completed a lot in the last year. We have a lot left to finish, and obviously when that's done, there's gonna be more. But everybody on this board is gonna be active. Strong armed into it if necessary, but they have done a great job and they're gonna continue to do a great job. So, does it, anybody? Okay, is there a second? A second.
okay, so,
Can you hear me? I said second.
Oh, okay, no, I didn't hear you, sorry.
so Wayne made the motion to accept the minutes.
Got seconded, and the minutes of the last meeting are accepted as written.
This was the emergency meeting, right?
Well,
Yes.
So we need to do another motion for the previous board meeting.
okay, for the April 16th.
Yeah, the minutes are in here after the emergency meeting.
I move to accept the meeting minutes from April 16.
Wayne made the motion, second,
Second.
okay,
All the minutes are accepted as written. So, Rick started for us the habit of reading a business statement. I'm very grateful that he wrote this for us, and I'm gonna read it again. Our vision is to cultivate an environment where every homeowner feels a sense of pride in their residence, fostering a neighborhood where people know each other, support one another, and participate in community. To provide management and directors that ensure our residents have questions and concerns acted upon in a timely manner, and managing upkeep and safety issues that increase property values. Every member working together for the good of the entire community. That's a heartfelt vision statement. So thanks, Rick. And in the old business, there's one thing I wanted to mention that's not on the agenda here, and that is about the petition for Governor DeSantis to take a look at what they've done to our street out there. And we sent in 158 signatures. And I believe like 65 were from here. So thank you all very much
How many
for
were-
signing on that. I haven't heard anything. I don't imagine that I will, but at least we took a chance to have our voice heard.
Joanne, how many was, I didn't catch the number, 100 and.
There were actually a couple of letters from Aliki that owners there wrote that mentioned a few issues that I didn't have to put down. Bicycles. Well, somebody's gonna get killed on a bicycle. It's gonna happen. And, the bus stop, what a disaster that is. And they reiterated how critical that the situation is that they created for us, so. It wasn't just one letter, there were a lot of people and a lot of signatures. So I really appreciated that. It was nice to have everything backed up, so we'll see if anything happens or not.
I did have a follow-up conversation with the gentleman from Florida DOT that attended our meeting at the, what is it, the Shoreline Hotel? We met there in the parking lot. And I did speak to him about the, that U-turn lane that was mentioned. I wanted to see if they made any more progress on that. It'd be a lane they would set up here at, Atlantic Avenue and Plaza, several hundred feet in front of the light, north of the light, where southbound traffic could enter a lane, make a U-turn, and then go northbound on Atlantic Avenue with just a verge sign, a yield sign. And he says they are working on that. He says it's a good idea, and he's trying to move forward with it. And then I had a couple of residents talk about how they don't seem to be cleaning up the avenue debris along the avenue. It just looks awful. So I pointed that out to him. He said that's under contract to an independent contractor, and he will notify them. And the third thing was, I said these bus stops where people are trying to get on buses is just absolutely horrible. I mean, no improvements have been made. They're having to walk in dirt. Wheelchairs don't walk in dirt. I said something really needs to be done. I do notice that they pick up the bus in our driveway on the north gate, so it's all paved to get on the bus. But I made him aware of those three issues.
They had a covered seating area for the bus, or they're expecting to.
I didn't ask that question. That would be really nice if they did, but no, I didn't get further on that.
See, I think we're gonna have like. Not how they.
Well, the police will deal with that, but I'm thinking about having it covered because of the rain, and if people have to stand up, they want to stand up. I thought that they were going to be putting a bench with a covered awning at each of the bus stops along the way.
I've definitely seen those in town.
Yes.
So let me follow up with him that inquiring on the shelters for the bus stops. I can certainly do that.
And I wanted to issue a special verbal thing to Wayne for helping to gather up the funds that were owed to special assessments. And he did such a magnificent job.
Gotcha. That's a.
Looks could kill.
It's doing that job. It's still ongoing.
Yes,
This month.
we're at the point of filing 2 liens on a couple of individuals at this time.
Thank you, Scott, for your time.
And our plan was to discuss, another board member who would fit. And determining who is gonna be secretary treasurer. We thought we were gonna have 3 presenters tonight, we're only gonna have 2. So, I don't know, do you want to, and
Board-
two?
The board member at this point in time, to need to postpone that to the later meeting. This is really a good job. But at the moment, I would propose, or I would move to defer that position, just do it later before the meeting. We've got some chat for the second.
Yeah, and there's a lot of conversation, I imagine, in addition to the presentations.
Okay, I move that we delay. Nominating, voting, whatever. That's not proper. I move we delay the selection of a new board member to a future meeting.
And determining a secretary treasurer.
No, I think you're doing a good job.
Oh, now I get it.
The moment,
Thank you.
well, you can't be the treasurer. Because you're
No.
staff.
Basically, it's a appointment in title. There's nothing other than, I mean, Joanne took it beyond and did the minutes, which was great. But there isn't any bookkeeping associated with it or record keeping associated with it.
Bookkeeper at this point.
Yeah.
Okay, so I need a second to just delay.
Okay. Moved by Wayne, second.
Anybody?
Is there a
I'll
second?
second.
That was
I'll
Scott.
second.
Yep,
Thank you, sir.
all right, so we'll
Table that.
table selection of a board member. And
You got an update? Mark and copy prepared.
You want to talk about that in the chillers?
yeah,
Okay, yeah, we'll do that. I hadn't put this in the handout. I'll just read it. It's not that long. One of the main things at the moment is the condition of the chillers. Twice previously, we have Marvin has sanded down sections, applied a product called OSPO, and painted the chilling towers, and it just really doesn't last more than maybe 6 to 9 months. So it really is kind of a rat race in trying to keep the metal in good shape. One of the vendors I used back in my hotel days was the same gentleman who did the restoration work in our stairwells that turned out so good. Is Allen Green Construction. And what he had was a 3-part process of applying an epoxy mastic primer, and then the second coat, an alpha fake urethane, and then a polyamide epoxy top coat. These are all epoxy type products. It's like an A and a B, and you mix it up, and you don't mix up too much because it only has a life of about an hour. So you got to get it on and do that. But he had did a couple of the big wind turbines that we had at the Bahama House that ventilated the garage we had underneath the building. And they were sheet metal and aluminum. And we did the same things down there, trying to keep them painted and would only last a short period of time. We hired him to do it, and this was about 7 years ago. And I drove down there a couple weeks ago. It almost looks as good as new. I couldn't believe it. I asked the manager down there if they had done them again, and she said, no, Alan's the last person to do the work. So I was pretty impressed with the process. I knew it wasn't cheap. I wasn't involved in it. I was doing stuff inside the building, but the GM was doing work outside the building. That was in her wheelhouse. So the process he used worked very well. So that's who we've gotten a proposal from to clean the units, prepare the affected areas, apply those 3 products I just mentioned, and doing cleanup. What's not included is unit disassembly. He's not going to take anything apart. He's not going to make any repairs. We of course have a company that does the repairs, and will not be doing any electrical work. The cost is $12,350 for all 3 processes to be complete. Upon a signed agreement, we put $2,000 down for the work to start. He feels very confident that he could do the same job on these as he did the wind turbines down at the Bahama House. So that's the proposal from Alan Green. The other item,
I have a couple of questions.
sure.
3 chillers, that's just on top of one building,
No, there's 1 chiller on top of the south building,
or the other,
and there's 2 chillers on top of the north above the shop there.
okay.
One for the west building, one for the north. Of course, the one on the south building is for the south AC. So there's 3 chillers in total. Yes,
Is there any sort of warranty for the longevity of, the protection?
I did not ask. I just kind of assumed it's good because of what lasted down there. But I'll certainly ask him about the warranty.
And I don't know if he feels like he has an exclusive here, which we might, but are we putting out bids coming in, because if somebody came in for $8,000 for the exact same product and process,
Um,
where
I do not know offhand someone who does this process. I learned this process from Alan years ago. I can certainly do that. I've just been working with Alan for so many years, and it's probably too much of a comfort level because I know what he does is good and he does reputable work. And I know in this process he does good work, but you're right. Let me try and find out from a couple other people.
it's not that I want to take work away from him, I just want to be good stewards of our money.
I understand that 100%.
Being prudent.
I don't take offense at that. I will do that. The other thing that he was going to be doing for, we, or could do for us, let me rephrase that. Is that rough area that we have on the pool deck that's in front of the east side where the railing is to go down into the shallow end of the pool. There's a bunch of rusty spots in there. Rebar has popped up in an area about 5 feet by 5 feet. And basically he would take this on if we approved as a time and material project. He'll the demo work he said would take about 1 day to take off the top layers, take off the bad rebar. Then they would put down new rebar and attach those points. Then the next day would pour concrete to cover up what they've done. Another day to do texture and then to restain it. So it'd take 3.5 days. The day to demo, the day to put the rebar stuff on, then a day to do the concrete and texture, day 3, and moving into the other half a day. I told him we could paint it. We've got the paint to paint it to match the rest of the deck. He says his cost would be $2,800, not to exceed $3,100. If he sees anything, if he doesn't see anything odd, he would refund any difference because basically it's on ours. And I've done deals with that before, but he says he can get into it next week. Concrete people are hard, good people are hard to find. And a lot of them are still busy on, believe it or not, seawalls. And I just noticed over the past month they put in the new seawall in front of the old La Playa Best Western. So a lot of that seawall work is being done by concrete people. The 2 guys that I knew and did work with before, they're no longer in business. I mean, I could
I make a
shop them.
motion that we go forward.
He made a motion to go forward, Wayne.
Did everything?
No, with the time and material for the pool deck.
The full deck, yeah.
Yeah.
I second.
So,
All in favor?
Yes.
so the pool
Yes.
deck, Wayne made the motion, excuse me, Scott made the motion and Wayne seconded. We've got a whole different proposal for doing the walkways. No. I've presented it to the board. There's a lot to it. There's, let me just try and be brief. There are 2 issues with doing the walkways. The first is anything visual, like you're seeing the concrete pop up along the walkway. That's very easy. It's easy to spot. It's easy to fix. That's about 1/3 of what's been found. The other 2/3 is think of it as like a tile floor. And you look at it, it looks great. You see no cracks in it or anything else. But as you walk on it, you feel hollow spots. And 2/3 of the proposed work he's doing is to get at these hollow spots that he's found. What he did on the day they came out, they take a long pole, about 6 feet, and tie a long chain to it, heavy duty chain, and go back and forth across the floor. And what you hear is the change in pitch when you go over a hollow spot. So 2/3 of the work is these things that are hollow. He's presented a dollar proposal to us. It's a lot of money. I figured the board we need to study more about it and decide to prioritize what to do first, what to do second, because this would be a project that would probably span in dollars or in funding over a couple budgets. It's around $90,000. So it's not something we have to jump on now. My thought it was kind of to move on with the visual stuff first and then the stuff we can't see. But we haven't really gone in detail. I haven't discussed that much with the board, more so the next meeting.
As the chief of police talking about, is that causing a hazard? But,
It's
getting to be a hazard.
Yeah. Yeah,
I mean, instances like that, can some of those things be addressed similarly?
yeah, I think that's what we would prioritize dollars and time to do those things like in front of Pat's unit first. And anything else that's visual, I think that'd be our first priority. The hollow spots are a different animal. It's delaminating that's taking place. The top coat, which was a texture that he put on versus the concrete underneath.
You should have a booth before, she doesn't even know.
Yeah, I do get that. And that's the rebar, water getting into the rebar and rusting and pushing up when it rusts. I figure next meeting, we could,
Which section of the?
all sides.
Also.
Yeah, we surveyed every,
First floor, second floor, third floor.
yeah, there's only 2 areas on the first floor. Predominantly those issues are 2 through 6. Then there's some areas on your balcony and Bobby's balcony and some of the stuff on 7. But yes, primarily 2 through 6 is the worst on the walkways. Makes no, I mean, even though the south building is 5 years older than the west and the north, it all looks about the same.
So my understanding, and correct me, that we just voted to go ahead with the pool deck repair.
Yes.
We're going to look at the chiller,
I'll try and bring you 2 more proposals.
great,
Yeah.
2 more proposals, and then the walkways.
We need to talk more in depth.
Yeah,
Meeting.
we really haven't
Yeah.
discussed it,
Yeah,
and it is a big project. And you're first on that list. But is that correct? Is that what everybody understands?
I think that is absolutely correct.
Correct.
And if your friend, Mr. Green, questions why are we delaying, just tell him the board.
He'll be fine.
Okay.
He'll be fine. Yeah, he gets it.
Thank you.
Yep.
Okay. Any other old business? The new business is, first off, something real quick, hurricane preparation. If you, look back behind, the old meeting minutes, there's a letter, hurricane preparation, and it's not so much about the physically preparing the balconies and the pool furniture and all that, but it's about volunteers to be captains of their pool. And who's gonna go and exchange phone numbers. Anybody who needs help getting their stuff off of their balcony. and just taking care of each other. And sometimes, you know, even if you leave, you want to know if anything happened. So if you have a phone number you can call back, that's comforting. So we don't have to do this right now because we have a vision program. But, it is hurricane season. And
It, looks like it's going to rain, or why don't you come building? Okay. Code is 636.
Hey, everybody. Okay.
You want in the kind too? Okay.
Into a presentation, answer any questions. Yeah, we're gonna have more coming first.
You want to go? You feel like you go for it?
Wait, I didn't put off.
Mike, Mike.
Did everybody come in? Okay.
You're no longer on deck.
Hi, how are you doing?
You know, Mike, he's been doing insurance in the building since the beginning of time,
Yeah.
something like that.
Hi. How you doing today? Sure.
See, I don't know if everyone's in the chair, so we get a better view of you and just be over here or wherever you feel comfortable.
Okay.
With anything you want to give that information, and then they do have some of your emails.
Yep.
Yeah, and you can ask you some questions.
Okay. Well, are there any questions to begin with that I can assist with? No, okay. My name is Mike Mort, with the Insurance Office of America, in Ormond Beach. As a, insurance goes, I'm in the condominium association space. Handle various condominiums here locally. Probably the largest broker, independent broker, if you will, here in this area. I gave Polly and maybe the board a list of references that are pretty extensive as to who works with me.
It's in the handout.
Yeah, okay. So I think where we're at, if I can kind of get to it, is that in November, I started looking at the appraisal, and what was happening is you had a 30, upwards of a high number of 32 million. And so I went to a firm that I have just used with Bella Vista, Island Crown, Aliki Forum, Aliki Management. Various boards have been very thankful for what I've done to let them know that what drives the premium is how much insurance you have to buy. And how much insurance you have to buy is driven by an independent appraiser. And it's an opinion of value. So if the opinion is 32 million, as your was, or 19 million, that's $13 million of coverage that you're avoiding having to pay. That's a big deal.
13 million a year, and this appraisal is good for 3 years, equates to $39 million. And in a soft insurance market, that's at least $200,000 premium that Bel Air will not be paying, and upwards of $400,000 in a harder market. If and when rates change, it's that simple. So, with that, are there any questions about what an insurance appraisal is, what it is, what it does?
If all parts of the insurance are based on the value of the property, including
The big
the
one
wind
is
is.
the wind and the property without the wind. Those are the drivers of the insurance. You have general liability, you have directors and officers, you have crime insurance, and umbrella. The driver of insurance premium in Florida here especially is the wind insurance and the property without wind. That's for a fire. You have to, by Florida statute, insure to full insurable value of appraisal. So if it's 32 million, that's a lot. 19 million, that's $13 million less of wind and property without wind that you won't have to purchase.
Just significant appreciation in value for this person to jack up evaluate.
I think it's the latter. So the insurance appraisal is not a real estate valuation. Sometimes the appraisal word gets thrown around. It's not. It's an opinion of replacement cost value of the shell, not the improvement of the interior which you have done. It's simply the shell. Your particular firm, I have noticed time and again that it has just gone way up, and everybody's, well, everything's gone way up. But this has been exponential, and I've seen it, I saw it earlier, last year, and it continues to be something that is like consistent. Yeah.
It also affects the water and sewer. We have to know, yeah. And then, one thing that's with the relocation is, I don't know, 2 years ago, we were at 18, and it showed us it's right, which is even a bigger job than this job.
Mhm.
And we need to have more people. Did you realize or was communicating with that?
I think a lot of it was, what was going on is that there was an inflation factor that was built in, and all the companies seemed to be going that way. So it was a surprise, but not a huge surprise.
Who determines the valuation of the building?
It's an independent, insurance, they're insurance appraisers, they're not real estate. They're licensed insurance appraisers. This particular firm has 32 years of experience.
Not your third,
No,
okay. I think I know a lot.
Back to Polly.
Apologists. No, this is an apologist there. We went from 18 to 25 without an additional appraisal itself.
We,
There was a 38% increase in projected value of this place without any documentation, and we wound up having to pay insurance premiums for that.
yeah,
Why?
because that's what the insurance appraisal company said. Like, I'm not a licensed insurance appraiser, I can't do it. The company, the insurance company doesn't do it.
But we didn't have an insurance appraisal company come out and do it. That was just the new premium, wasn't it?
there's two major companies in Florida now, three with what Mike has discovered, that have been doing building appraisals for Florida. Sedgwick is one, and the other one has got the name Reserve in it. We're required to do one every 3 years by statute.
Okay.
Um,
And if
his-
2 years was enough, though, only 2 years was up.
Yeah. What we ended up doing with that to try and get a handle on things is they had a program where they would issue, they'd be doing work in, let's say, year 2 and year 3 and give you updates. And doing the updates for 2 years, was a lot cheaper than doing a whole full review at year 3. So we found it cheaper to do updates instead of getting hit with a whole new study in 3 years. So we were doing that and getting some partial values to that.
Well, the savings was in the cost of the appraisal. However, the differential, a 38% increase in the cost of the insurance premium is astronomical. I don't understand. Well, maybe I understand that it's just, I'm just looking square in the face of it. We did it in 2 years and they came back 2 years later, not even 3, and told us that our value went from 18 million to 25 million. And therefore, that was the increase.
I'd have to,
Somebody.
Now, well, Sedgwick doesn't have an interest, like they're the appraisal company. They don't have an interest in like doing something by way of raising coverage or replacement cost. That's all they do is they put it in a computer and they have a system and it puts it out. And I think what was happening in that particular time was the collapse of Surfside really turned everything upside down. I'll tell you why. The property insurer on that was Great American, and so they paid out like that. All the companies were like, wow, we've really got to look at what we're insuring here for and how much, etc. And so there was that in the inflation. So you're not alone in what happened there. You're not. Sedgwick is arguably one of the largest, if not the largest, appraisal firms in Florida. I just got sick and tired of it. I'm like, this is crazy, literally. So having found somebody who's very good at what they do, they would take a second opinion at no charge and say, I think we're going to come in here. And they did.
I think you relate to the fear and what Sunshine building collapse did is that all of a sudden these carriers are getting very concerned and asking a whole lot more questions about the state of the building. And then we all know that Tallahassee passed the Millennium inspections, and the insurance carriers are really interested in that. Before you got the quote that we got, they wanted to see our Millennium inspection. They wanted to see that we did the repairs in the stairwells before they then quoted the policy. And I'm sure if we didn't have those two things done, that it would have been even higher.
They probably wouldn't have quoted it, to be honest with you. There's no interest in a company when they have 10 others on their desk they can quote. You follow? Like it's you have to push, and that's what we did. And thankfully, you had the information on hand to be able to say this was taken care of, that was taken care of, passed the milestone, these secondary issues done. That's a big deal. Without that, you're stuck. It's not like these surcharges will be like, yeah, we'll just pass.
It's just going to have to be a better risk for both considerations.
Still a big difference between appraised value and replacement cost.
Yeah, so appraised value for real estate contemplates your view, where you are for location. Okay, it includes your unit, what you've done to it. I've seen one unit in particular has done pretty well. Okay, that's real estate. Replacement cost is different. Takes all of that away. So it's going to sell the building. Here's what it is: X amount of square feet.
The low insurance cost is replacement cost or
Yeah.
appraised value?
Replacement cost. So your replacement cost to 19 million. 19 million. Yep.
So if we 32 million before, and we had such a dramatic decrease in current valuation, if it costs 26 million to replace the whole house, we can up to 19.
That's correct.
So. My question is, how the hell do we know what we're really worth if we've got one group telling us 20 something or 30, 32 or whatever it was,
Yeah,
not
32.
19. It's nice to have lower premiums. Question is, what would it really cost? I mean, if we took a major hit and not just from the roof coming off, we know that the roof isn't even covered by the insurance at this point. But if something blew off the roof of the street and they took out chunks of the wall, you know, I mean, if we had a category 5, they did physical damage to the top 7 of floor of the street there. I mean, how do we know?
I don't, you know, I don't think you're ever gonna know. That's the fact. So that's why you go by an appraisal. And if you don't, you know, if you don't like 19 million, you can go to 32. You know, I mean, and that's the truth though, the truth is that we're probably never gonna know. And if honestly, if Bel Air is completely destructed, this peninsula is done. That's my take on that.
Right. Yeah. Well, we're gone. There's a lot of other stuff on the other side.
Oh, and I don't even, you know, then the game is kind of over where can you even rebuild? So, that's kind of the answer to the unknown. But the firm that did this, so let's bear in mind, the firm that did this has a huge population of customers down in Southwest Florida. They went through all of those storms in 22 and 0 issues. I got a full, you know, listing of what he did, and it was like 0, none. Now, take that for what it's worth, yeah.
Is that insurance now?
Tomorrow. Yeah. I've pushed it off. We've had it, you know, I was thinking the 22nd when the meeting was, so it happened the day after. But we're at the end of we're at the beginning of storm season, and so set it up for May 30th.
Question that, I've ever gotten, because it's a great area and then everybody's from place ways. Are the slider doors and windows, covered as part of the walls? And if the doors and windows are damaged, which insurance covers it? Is it the property owner's property insurance, or are they considered part of the wall and it's the condo insurance that covers it?
So this is a black and white answer for 99% of every condo in Florida.
Okay,
The answer is that the association is responsible for the windows, sliders, exterior doors, area.
okay.
Yeah, you don't get that 1% is, I've got one customer, 1 out of 100 that did this opt out with Florida statute 718. I'd never seen it before. And it was this time and place where you could do it. And for them, they wanted to, it was their ACs. Because if you have any ACs on a roof, that's actually the association's responsibility as well. But so it's black and white for that, up to and including the drywall. So if we're in a,
Thank you.
you're welcome. For a flood, it's different. Now, what's the chances we're going to flood here? You tell me. I don't know. A lot of things happen that we don't think, but with a flood, the association is responsible for everything except the unit owner's contents. A little different, yeah. And that policy is set by the National Flood Insurance Program. Doesn't matter what company it is, it's the same policy, same form, everything. So, but yeah, the floods here, it's probably it's going to be rising water, you know, between water, of course, it's going to be rising water that does it. Those on the river suffer quite a bit. We had one where the water got into the elevator, and it's called, it goes down way down this pit, elevator pits they're called. Nobody could pull it out. Had to have a company out of Chicago come in, extract it. And you just can't put the water back in the river. Yeah, that was $1 million right there, just in that whole extraction. Every $1 million of insurance you carry as an association carries with it a deductible. Okay, so the association, if you had a $1 million policy with a 5% deductible, that would be 50,000. So 19 million is what? Almost $1 million, right? So 32 million would be about 1.5, 1.6 million. So there's a correlating benefit to appraisals with respect to 19 million versus 32. It's not just the premium. It's like, am I ever going to get anything out of this policy? Hope to, but hope not to. It's one of those things. You're like, I hope we don't ever use it. Hope we don't ever need it. But that's your deductible. Your deductible, and I think it's critical to have somebody that you like or trust that can respond if there is a need for it. Yeah.
Liability policy.
Mhm.
That's 124. Is that 124 units? Is there a few more units?
We're not missing any units.
Is there 128?
Because 4 units are commercial.
Under the liability policy?
Yeah, and anywhere on this property, regardless of where somebody goes, on the property of Bel Air is covered under the liability policy. So inside the commercial units, there's the same thing as a unit. That's inside the unit. That's premise liability for the unit owner.
Under schedule of exposures. There's 124 units.
Mm-hmm. All the commercial, all of them are covered. Anywhere on this property, anywhere.
Okay, so it's 24 or something.
Typo or something, but yeah, anywhere on this property that is covered.
But also, nobody else would have to cover their, they have to have their own business liability insurance to protect the association. Because the association would be the property. Liability policy. It may be covered by this here, but it's kind of like you gotta have, in order to work, you gotta have that. And if they didn't have it, we should require them to have it, because they don't. Then it's $1 million liability. And I know it's a couple million, it's less than $1,000 a year on commercial liability. And they should have that, because it shouldn't rest on the association responsible from their policy paying for liability claim that might happen in the parking lot or in the office of the dentist. So what happens? We should have their own liability coverage first, and if they don't, it's something that we as a board, I think it's important.
Yeah, it's kind of thinking.
Exactly.
Did anybody else have any questions?
You want me to run through the numbers?
Sure. Yep.
If you turn to page 2, that's got IOA at the very top. I just want to run through those numbers real quick with this, if I could, to kind of explain what we're doing. First off, the 2 policies we do have in effect right now for general liability and for property without wind come to an end on the 30th.
Mhm.
And we get paid the balance of unused premium back. And that works out to some 49,000. So basically, we have two policies at the moment. Starting on 5/30 in this proposal, we would have three pieces of coverage. We'd have the general liability at a lesser number per month, property without wind at a price much less per month, what we're doing at the moment. And we would have a wind policy with the cost of $69,598. So we'd have wind with a $20,000, 20,143 down payment, and then 7 equal payments, and that's on the next page. I'm sorry, it's on the preceding page. It's on page 1. At the bottom, $7,064 per month over the next 7 months. So that's basically how that worked. So the total due we'd have to come out of pocket, which would go to reserves, and we'll pay back the reserves back 100%, would be $91,579. Now, to pay for that, we'll get that $49,000 refund in about 30 to 60 days. So that brings the cost down to $42,579. Now, that is for the coverage for not just the end of the year. That's till May 30th of next year. The policies that are being written are 1-year policies starting tomorrow. So our cost would be the $42,579.95. We would have to then make those 7 payments of the $7,064 over the next 7 months. So it brings it up to $92,034. So we are budgeting currently based on the old insurance numbers that come out of our operating account and into pay back the reserves of the $8,792 each month for the next 7 months. So that pays back $61,549 of that $92,034 principal. So that leaves $30,000 left to pay. And what we would do is that amount would float into 2026. And so to get that $30,485, we would have to take out of operating $6,097.03. So here's kind of the good news. So next year, to pay for the rest of the policy, we're only coming out $6,000 a month, not $8,792. And in addition, we're also getting for that money that we're even paying less on a wind policy that's costing us the $69,598. So from that standpoint, the refunds we're getting back, there's some 49,000, goes a long way in paying back the wind coverage that we'd be getting. And because it's less principal, less money for the insurance, it's less money per month. So that's kind of the good news, is that when we come into the last 5 months of the policy, we only have to pay back out of operating $6,000 a month instead of $8,700 a month.
Next year, we're not gonna have a $49,000 refundable premium, right?
Correct, you don't.
Correct.
Yeah.
Okay.
But everything starts over May 30th of next year. And we'll have to massage those numbers a bit, because I don't think you're going to get it when we do the budgeting in December of this year. We're not going to have a quote for the wind, general liability, and property without wind in December for a May 30th start. So we'll have to play around with
So
those.
there was a time
You could do that.
I could do that. And I think that if we have a quiet season, then I'll be able to do that again. If we don't, then
If we don't have a flat season, it's gonna be at least 7.
yeah, honestly, You take advantage of what you can, where you can, and how you can. That's just how I look at it, year to year. We went on a run from, I don't know what it was, 2000, it was like 9 or 10 years. But this is when you look at this rate. It's $19 million paying 100, let's say $12,000. That is an incredible rate for insurance. You putting on that roof has been very helpful in attracting Frontline, who's writing this. That's a big deal. Without that roof, it's completely different. But you're benefiting from it. I need you to know all that money you spent's worth it. It's going to pay off.
Before the hurricanes, the previous that, do you remember what was our total insurance cost? Wasn't it about 100 and something like that?
422 of Ian and Nicole, you mean?
Yeah.
So
We
we were,
came in with $250 million just on the wind and rain or something.
oh yeah, oh yeah, yeah.
That was the total.
I would say if it was January of 22. Okay. I don't even think it was 180 all in. I don't think so.
And it was at a higher valuation at that point.
Yeah.
So we're getting practically the same premium we had prior to the hurricane. A lot less maximum coverage, so we don't get it.
Yeah.
Yeah, that's right, right.
Yeah.
So it's back to what it was, pretty much. We had the same amount of deductible back then as well.
No. So the deductibles up until, and I won't bore you with why the insurance market collapsed. I won't bore you with this crisis we went through. But before Ian and Nicole, we were heading into carriers leaving, carriers going out of business. Why? Because they were getting sued, whether you like insurance companies or not. What happened was from Irma and Matthew, that's 16 and 17, all of that finally came through the system. It takes years. The attorneys and roofers got together, really put the screws to the insurance company, good, bad, or indifferent. They were leaving. So your question about the deductible, it was lower. We were down to like 2%. Yeah. So we're almost there. The deductibles are still, a little bit of a challenge.
You know, 5%. It's a big difference.
Yep.
Yeah.
Yeah.
You know, this is from time with people stuff. I guess Friday recently with like AM Bath, which I think we have noted here for your other policy, was and that they're, I guess they're inside. So we were flying forward and I Googled it even because that's what I was told, and sure enough, there's a lot about it out there and that there's no longer an AMS, but that's what you're not really doing anymore. And things like that.
Yeah, they're arguably Florida's most stable insurance company, period. They don't like how they do ratings. They don't like it at all. They're independent. They're the last company, one of the, if not the last companies that have been bought by big money. They're an independent company. They're a small, they're huge, but they're a small company that manages their risk. They're not interested in bad risk. I get turned down for insurance applications by them all the time if you don't have a good roof. That's all they want. If you have a good roof, they'll take the risk. They have the reinsurance. All of their reinsurance is backed by A-rated carriers. They're the company that is, I've got them on my home.
But they don't like the AMS rating, is that what you're saying?
No, what I'm saying is that they don't like the games that go on within those, to be honest. I mean, that's just the truth. Yep. And I've had this happen before where an agent will put it down and I'll say, who told you that? Then I'll find out and I'll say, okay, that's interesting. You represent them, huh? Okay. And then that agent then is found out by Frontline, and Frontline says, you know what? we don't like what you're saying about us. You represent us. And yet you're pulling this stunt. So I see that quite a bit. So I'm a little surprised by the question.
Who is Frontline's reinsurance? Is it General Re or is it Swiss?
Yeah. I've got a list of them I could send to you. Yeah.
The reinsurance.
Mm-hmm.
Okay,
Who's next? Aaron Brown?
thank you, Mike.
No, you're welcome.
Thank you very much.
You're very welcome.
If you want to get to my office lobby, Mike, you can go out that door and walk around and not get wet. Yeah.
Thank you.
Thank you.
We can,
Thank you. Thank you.
we can take off when the rain stops.
Yeah. It's already got that. Like somebody calling me over here, you got zero, but you go away from there. You got the other guy waiting over there, everybody had a water tap.
Well, I think, Molly's gonna bring us.
So you in?
Yeah. Yeah.
Okay. It's not enough people here, let's just go. Waiting for them. Every time you want to.
It's not a bill.
How's the Zoom meeting going next?
I thought you were buying.
How's the Zoom meeting going, Rick? Uh-oh, what did I hear?
Oh, hi. How are you doing? Sounds good. Everything's good from this end. The only thing that we noticed was that there's a low bandwidth issue, so it's kind of choppy. Other than that, everything seems to be okay. We're having a little bit of trouble hearing some of the comments from further away, like Wayne is very difficult to hear.
When I turned the
Otherwise, everything's
computer, I
good.
lost. Okay, are you seeing me?
Still which?
Seeing him.
Yes, I can still see you. Yes.
Okay.
You see your chin.
I just got a Zoom
We
screen
didn't
now.
shave
but that's all right.
today, I know that.
I'm happy. Thank you.
So, yeah, so down at the bottom left on on your screen, there's some buttons down there that pop up when you move your cursor. And one of them says mute and one of them says stop video. So if you want to see the video, then all you have to do
It's
is
sort of hard to make you fall back.
bar off of the video, where it says stop video or video. I don't know if you can see yourself on the video or not, but if you want to see it, you just go down to the bottom left and the taskbar will pop up. And then down at the bottom left corner, you'll have a microphone and a video camera.
No, not seeing it. I'm just going to turn it around. It's working, but so
Okay,
I'm so
yeah,
happy.
yeah, everything's good.
I mean, we're good.
All right. I'll begin, and if you all have any questions, just let me know if we can, address that at the end. I'll kind of go through some of this quickly. I know you're probably on some of the time constraint, but I'm John Lindsley, Jackson Auto with Brown & Brown. A little bit about us. You probably were in your backyard here in Daytona, an agency since 1939. From an association standpoint, I handle over $750 million in property and handle anything from like a Beersford Manor to the Marina Grand here locally. From a coverage standpoint, typically how we'll go about things is that you pay large premiums in insurance and you want to make sure that you're getting something that, has some value to it. So we did a coverage review. I don't have numbers here. I wasn't told to bring numbers, but we did a coverage review and an analysis of everything. Your property coverage at the time was insufficient from a standpoint of ordinance and law. And this is in this presentation I can send electronically. I know I have prior, but a building of this age, if you had a loss, your ordinance law at $100,000 limit, it wouldn't cover it. You'd have large code changes, things like that. And so I'm not sure what was illustrated to you and what was not at the proposal time last year, but you would have, in my opinion, I'd say based on claims I've had, you probably get a 60 or 70% payout, and the rest would be ordinance law that wouldn't be covered. The associations, I know wind insurance, obviously a big topic, it's a big topic for everyone, it's been a large premium, and everyone's trying to figure out ways to kind of find the best, bang for the buck per se. But some of the ancillary lines, especially for an association, are very important. Your liability care had a lot of exclusions on that, and a lot of these are going to be shown in here in this analysis. But you had an assault and battery exclusion, firearms exclusion, fire or fire-related injury exclusion, named insured versus named insured, water-related bodily injury. I mentioned assault and battery, limitation on coverage for tenants and lessors. So there's a lot of exclusions on your liability policy, and I know when we had met Mark originally, there was a roof project going on and things of that nature. So when you have those exclusions, you want to make sure that, for me as an agent, that you have vendor agreements in place and things like that to transfer risk. Your property is a finite amount. If you have a $19 million building, that's what you're going to get. But if you have a big liability loss for $1 million for an assault and battery claim and your policy excludes it, you'd be divvying up $1 million lawsuit from that amongst unit owners to pay it out essentially. Yep.
Just, I was kind of confused there at the beginning, and now I think I get it. You were doing those comparisons against Kinsale, right?
That's correct.
Yeah, Kinsale will be gone tomorrow.
Okay.
We are getting a refund of premium of 49,000 by canceling Kinsale and
Okay.
entering into either you or Mike a 12-month policy starting 5/30 for the next 12 months. And the quote that we've got is with Frontline. The Frontline or First Line? Frontline, with Frontline for the first 12 months. And that's a lot better policy than what the Kinsale was. And the reason why the Kinsale was so worse is that there was no Millennium study placed in that one. Now we do, and it's a good report. No structural, and then the new roof, and then we
For
did
Kinsale, the roof wouldn't be applicable.
no Kinsale didn't do the roof. Yeah,
Yeah.
but that policy is gone, and we knew, or we kind of knew, there were a lot of not good things in that because of the issues that we were fighting at the time with the building value being high at $32 million. And we had a claim out there that got fixed up, so that wasn't impacting reserves anymore. But it's just say that the Kinsale is gone, and now the competition would be yours and Frontline.
Well, I'm not gonna have I wasn't told.
Yeah.
So if you're making coverage effective tomorrow, then you only have one option on the table.
Well,
Just-
Because you're off or something.
Yeah, it doesn't work like that. I mean, it's a long process on it. The reality is these were the mistakes of your prior agent. Yes.
So it's not for your whole meeting, what it took in terms of agent for from state forward.
Okay.
And then look at the policies, our previous one would have been.
Okay.
You know that you're not on your numbers. Insurance broker. The process could be pick the insurance broker and then the insurance broker will go through. We're not getting another.
Yeah. Yeah. Well, with regards, go ahead. You can get it out there. I mean, that's not an issue. I mean, June 1st, it is wind season, so typically carriers will have a higher minimum earned premium on it, but it's not like it changes the premium that you would pay. Obviously, it's during wind season, so it's usually carried, but you all have been without it for some time. So from an urgency matter, I mean, it can wait. With regards to Kinsale, you mentioned 3 years with them. Those were the exclusions on the table. And I know it's easy because another agent comes in here, we did it, and then everything's fixed. But is that really, in years to come, are we there to be fixing the work of the prior agent? I can tell you that it wasn't addressed in a proper manner, and this is in my opinion, because if I had those exclusions in that policy, there would be vendor agreements and certain things in place that I would have worked with the association to make sure coverage was shored up. There's times that policies are with Kinsale, and because they have large claim history or something of that nature, but the mention of an appraisal or milestone, that really doesn't apply to general liability on slip, trip, falls, things like that. So some of those things were, within this presentation overall. With regards to wind, I guess a question for you all, the original values were a lot higher at 31 million, and now they're 19. So you're looking at roughly $120 a square foot on the replacement cost. How did that come about? Because an appraisal to go down to that.
It was 18 million. For 2
And
years.
it's 31.
And then it went up to 31 last year. And the beginning of this year, and then at that point, our current landlord had suggested that we get a new appraisal. And so.
New company.
Appraisal came in.
Okay.
Basically, it was a bigger bill than 90 million.
Okay, gotcha. Yeah, because that comes out to $120 or 127 a square foot, and then it was 203 before. I would just mention that I'd be curious because you can't build 100. You couldn't rebuild this for 127 a square foot. You can't build a frame house right now for that. It's just something to mention. It obviously helps you because your premiums go down and the carriers are agreeable to it, but I'd be curious how they came to their basis on that. But I guess on the long story short of it all is that we did this review of the coverage. This was Mike's work. This was not ours. You guys are with those carriers for 3+ years. I won't be able to turn around a quote in 2 days or 3 days. It would take some time.
This question,
Mhm.
pretty good rule of thumb in insurance is if it's not stated in the policy, it's included. In other words, if it's not excluded by line in the policy, it's included.
Yeah, that'd be a general.
What is your general liability policy going to exclude? What's your standard exclusions that you have? Because if we're thinking that anything should happen here, I understand the firearm thing, but somebody trips and falls in the parking lot, or somebody gets, cracks their skull on the pool, or anybody, what are we going to find out from our insurance that, oh wait, that's not covered?
With our carrier?
Yeah.
But I don't even have the underwriting data. I don't have the loss runs or some of those pieces of information, so I couldn't tell you because I don't know the history of it. A lot of them won't. I can tell you all these exclusions are typically not on a standard general liability policy for association. The assault battery on your policy includes mental anguish, and so you could have an argument, you could have some whatever happens amongst individuals, and it can be a significant claim. Policies have exclusions. Agents need to illustrate them, and they need to make sure the association's aware of it. Like the independent contractor exclusion, things like that, making sure that you have the subcontract agreement, vendor agreements. There's going to be items on there to address it if they are in place. You're limited to not 100,000. Like I said, when a claim happens, it's either excluded or it's in the finite print of the policy. They would point to that and say you have 100,000, ordinance law. It's not sufficient. It's not. You could send this to any other broker, and they would, if they're worth their salt and they know what they're looking at, they're going to point out all these things. They're going to go, why are you with this broker and what are they giving you? Unless there's something in a proposal or some long detailed email prior to us exposing all this, it was the agent's mistakes, for not illustrating. And so then it leads you to the board on what decision you want to make. I know we're in a time crunch here. If you all are looking to have wind insurance and things like that, you pretty much stuck with 3 options. You either stay with Mike and you move it to another agency, or you can have it split where each carries a certain amount. Wind insurance is obviously a priority because it's the one coverage you don't have. You have all the others in place. So I would say wind is something you probably want to act on sooner than later. And if that Frontline's quote is there, Frontline's competitive. They are. And to do that, it probably meets the needs of the association. So if there was one quote to transact on, you could do that. And then you could have it, the rest of the lines looked at by the brokers since they're already in place. It's going to be up to you all on it. But at the end of the day, these were all items that, like I said, if you look back in past history, if they weren't addressed, they should definitely cause concern for the association.
Let me ask you a question. What is Do you normally go through the exclusions with the association?
Absolutely. I can give you redacted information of times that I've done that, as well as all the vendor agreements. I do training for, both property managers, employees, all the above. I mean, if you don't, the last thing I want to have happen, I mean, if you have $1 million assault and battery claim, there is no way that this policy is going to exclude it. And then when it has to be divvied up amongst unit owners, the first response they're gonna go is say, well, our agent, we're gonna go to our agent. You're either gonna sue your agent if they didn't illustrate it, or you're gonna have to pay out the $1 million one way, shape, or form. And the thing with liability is there is no limit to it, and your umbrella is gonna exclude everything below it. So any catastrophic claim you have that's excluded can be a big deal. It's just it hasn't happened yet. But I can guarantee if you had an uncovered claim that was $1 million, your prior agent wouldn't be in this room. You'd be looking for another agent, hands down, whether it's Brown and Brown or Foundation or Herbig, whoever it may be. It's just it hasn't happened, so it has haven't had this thing of it. But if it did, I assure you, it would be a different tune. So, but yes, absolutely. I mean, I have the vendor agreements, things like that we do. And just illustrating it and highlighting on the policy, putting it out there in front of the association.
Represent this policy that we currently have. This general liability policy.
He does. Yes.
Yeah.
Yeah. Well, there's always something else that can be out there and it may be a little bit more expensive, but at least illustrated. I mean, I can tell you, even with me, I had a policy with Kinsale that was $5,000 less and the board chose to go with that. That's their choice. We go through the comparison of coverage and sometimes they want to go that way, but to say it's the only thing out there that's not true. If someone would quote it, it just may be higher, maybe lower, it's hard to say. I don't have that data.
It seems based on this, it seems like. Like liability. Seems to be, I mean, it's a big trouble market, guys.
Well, I think in history, what's been going on is we get a proposal, we look at the proposal, like we got a proposal and we accept it. We never actually get the policy because when I asked policy, there wasn't one in the building, electronically or credit. We need to look at the actual policies, go over policies, look at all these exclusions before picking our policies, before paying for it.
Well, I think we should be out of policy, we should probably furnish it to our attorney as well to help them on file. Because if there's ever any claim, who are you gonna call?
Yeah.
The insurance company or attorney. And then obviously guys issue policies out there. What's that? You issue out physical policy, the document, it's not just. Yeah, I mean, I know it sounds a little crazy asking, but what we're saying is that we don't have it.
As a broker, so we send them both paper form and electronic.
Yeah.
Some want just electronic, some want paper as well, so we do both.
Gotcha.
They typically come 40 days after.
If you were going to write a wind policy for us, what's the time frame? How long would it take to write it and when would it become active?
It's gonna vary on time. I can tell you if there's frontline on the table that's already been quoted, I would just go with that. It's gonna be in line or cheaper. They're competitive. So that's the one that I would say is, but look, I'm here to earn your business here, but on that case, that's already on the table. If it's done, we'll go ahead with that because you're in hurricane season. As for the other lines that are in place, that may be an area that's up to you all. You could go transact that entire proposal, or you can look at it, with someone else as well.
Yeah.
Because they're already in place. And I don't know all the liability specifically, but I'm sure there's exclusions on it that may be clause, so it's hard to say.
It was said before that you gotta select the agent before you.
You have to select the agent, and the agents, like whatever he quoted us, they can quote the same thing. And then we're talking about before, maybe even cheaper, you know, depending on how they want to do it, but it's, you can pick an agent first, and then the agent goes and gets the policies. You can't have multiple agents getting multiple policies, that's just not the way it's done in Florida.
You can have multiple agents, but they can't go to the same carrier. So if I approach, let's say Kinsale, if I had Kinsale that I approached, Mike couldn't go to Kinsale or another agent. But typically you do pick one broker, just, it makes sense, someone that you trust that's gonna represent you in the marketplace. No, you can do market. You first come, first serve, where everybody gets in at 120 days. And if I send something to Kinsale at 120 days, that reserves the market. If someone's in 119, they can't work. So you do that, or you do, I mean, the two best ways are select a broker, let them run with it, or two, do a market select where you say, pick your top 10 carriers, bring us proposal.
And if somebody else takes it first, you can't get it.
Well, if there's a market select, the board would be signing an agent of record where they'd say, these 10 carriers are for Run Around, these 10 carriers are for, you know, Iowa, so that they could select it beforehand. Because by the stroke of a pen, your agent can be removed, including me on it, you know, if someone signs an agent of record letter, but you can do that for market select and put 10 carriers on each and have a clean process on it. But those are the three ways: first come, first serve, market select, or just name an agent to represent you.
My concern is that we have one of these right now. However, in reviewing them, I know a little bit about insurance, not a lot, but enough to be dangerous. And I know that I had a question this a long time ago. I
Holly?
mean, the exclusions
Holly?
are just too damn many.
You turn the
So
lights
my
on.
point is,
Mhm.
my point is, I guess I would say,
Thanks.
if you came in with a pop, if you came in with when I personally, I put you on the spot, and I go back and say, this stuff is crap. I mean, I'm looking at the minimums, what is covered, what isn't covered. I mean, granted, we don't have many firearm issues here, but you know, liability, somebody getting hurt, there are certain things that it excludes. How we get hurt if they, you know, in the parking lot, whatever. I'd want to have a comparative analysis. I mean, I don't want to be financial advisor. No, I think against Merrill Lynch for their business. So Raymond James, you guys are out there doing the same thing in that regard. Yeah, in a sense, I just would want to. I mean, I would say, show me a policy that has few exclusions. And I'd ask them to consent. I mean, when it came down to that, policies were like, then the actual only difference is price at that point. Right? That's right.
And then with the exclusions, it's illustrating them, because everyone's gonna have exclusions in every policy, but you know, knowledge is power, and if the board doesn't have their policies and they don't know of these things,
Right.
like I said, you can have them, but you just need to, same thing as a financial advisor.
Right.
Your client wants to invest in something that's risky, you just illustrate it, show them, and they ultimately businesses in May, they have the information and information's fine. So.
I think we need that. I think we need that proposal, with not, I don't mean that premium amount, I mean proposal.
This is like anything, yeah, so that's one of the biggest things that I was saying, yes, we have it all looked at, even when I said we had 124 instead of 128, we like, it's a typo, well, we would have just agreed to that, now we agreed to only 124. So we have to have it looked at and the policies exclusion and make sure that we're really agreeing to it before we just take it.
Absolutely.
Yeah,
I agree with that. So,
yeah. And there's a lot to it, a lot to all this insurance stuff.
so do I hear you saying that the wind coverage that's been proposed is, it's just that competitive that it.
You have it on the table right now, looking at what's coming up on June 1st, I just think. It's gonna be the line of the cheapest by far. I would double check though, because there would be a difference on it with Frontline, because Frontline has two different papers, they have one that's admitted and one that's non-admitted. And so Frontline lost their rating, you just Google Frontline, I mean, they had a Demotech rating, so there's AMVEST and best. Demotech would be the secondary, and then the third would be, well, really the KBRA is the rating, they've only been around for, 10 years or so. But with a non-admitted carrier, they go insolvent, you don't have any taxpayer dollars to back it up. For on an admitted carrier, you get 200,000 per unit. So I would just confirm that it's not the non-admitted front line, because that would be a far lesser product.
When you say non-admitted, to the state? Are you talking
Yeah, it would be not, Mike would know. I mean, if you have on your proposal, if you pay surplus lines taxes, it's not admitted, so I don't know. Specifically, but I would just confirm that there's two different lines.
You want the admitted or?
Yeah, admitted on your property. Just because their financial condition. Like I said, you could Google it, you can see where they were dropped by Demotech, Insurance Journal.
So that even if they had reinsurers, like if the general rate or any of that kind of stuff, if they have that. It really doesn't.
If they have it solved,
It's not solved, and it doesn't make a difference.
Yeah. So like in 2021, American Capital would install firsthand. You could have 200,000 per unit by an admitted carrier. If they were non-admitted, people would be out of luck. If you paid, let's say, for simple numbers, if you paid $100,000 in premium and you were halfway through the policy year, you wouldn't get $60,000 back. You wouldn't get your, the claim paid. It's just strike 1, 2, 3 again.
Admitted, is that like the state insurance pool, like when a life insurance company goes out of business?
Yes,
Only the carrier.
It's a guarantee, like a foreign insurance guarantee. I would just double check on that, but if it is that, I mean, absolutely, just because of the time that they get on that premium, and then your other lines, like I said, you can go with those, or you can. They're in place right now, so it's not dire straits to have the coverage. You have something in place, but when for which one?
For the lanes.
For the X one? Or wait, I can't do the frontline one, and that's already quoted for them. So, yeah, not on that one. I could do it on the other lines, but not the front line. That's a relatively new contract for us, and it's limited on residential. I know they won't just switch that over if someone's already approached it. We could, but I'm just saying front line where their price is gonna be like Cabrillo Crystal, some of these others can quote, but just on a time standpoint, I mean, that's gonna be where you wanna be on this time standpoint. Now, if I had lost all that information and we knew it's from the presentation meeting, we might be in a different scenario, but well, yeah, then you have more time.
Yeah.
But it would be my personal opinion, if it is admitted frontline, to at least put that in place, and then you have us look at the other lines, because they're already in place, see what we can do there. You can have 2 agents that represent you on, and then try that out that way.
How is the competition to frontline other wind carriers?
It all depends on the types of buildings and things like that. Like a Marina Grand, the Frontline can't compete on. They can't, right? Because they don't have the capacity to do it. Whereas Frontline kind of specializes in. I mean, that's some of the values going down help you go to Frontline. Because they wouldn't write. They had a $30 million cap. Some of it's changed, but they're going to be in line. They're going to be. I mean, 60 or whatever you are. However, it's a good deal.
If we have been quoted for the non-admitted front line. And we were to choose you as our broker, could you quote us for the admitted front line? No.
Because if Frontline's looking at it, they're gonna determine that, and they can't deviate. So most associations are all written admitted now, typically. Sometimes you'll see them try to slide non-admitted in, but I just mentioned that to you because I want you to be aware of it, that,
Non-admitted is a lower premium.
It's not a lower premium, they're just more flexible on what they can do, because they don't have the laws and regulations of Florida, they're not, or how they're, writing insurance. It's kind of like when you see like State Farm, if they write your auto, if they file for a 12% increase, that's because they're admitted and they're filing for, they have regulations, whereas the non-admitted side is kind of Wild West. They can choose what they want to do. They can add whatever exclusion they want. They're not backed by
You have
Florida.
an admitted wind company that could be somewhat competitive.
Not within that premium. I mean, I think, like I said, I would go with Frontline on it if it's admitted. They're going to be, the new roof and things like that, maybe, but with the way time is, if it takes me 2 or 3 weeks to get that and you have a major storm, I would take the Frontline option while it's on the table. It's my personal opinion on it, if it's admitted. You know. So, like I said, I know you all have a lot going on, it's not in the meeting, things like that, but if you have questions on this, like I said, our job is, you know, when we put these policies in place, we want things to be a long-term relationship, whether it's this year, next year, or whenever it is. Build the trust, because ultimately what you all have on, what you're paying for, you want to have the right product, and you want to have knowledge of what it is. And like I said before, the agent had this, and it wasn't illustrated, if you don't have your policies, that's even further evidence of it, so.
I would either, I would suggest. I would suggest that we let them give the other coverage. The non-waiver, I just think.
Yeah, I was saying the person may be a patient and then they.
I think, but not just the free, but it's the coverage, I mean, because something if you pay for it, you know. Don't tell me you're on Lexus, you have a final format, and you know, what, you know, or something, you know, you pay for the gold package, you're gonna drive or you fall. This is everybody's quality investment, this is our home. That's not saying we should be overinsured, but I'm also saying that we shouldn't be underinsured. In a case like this, a liability incident could do some damage to us because it might not be covered.
Yeah.
So I would say we could conceivably put a proposal together that would not exclude a lot of these things.
I mean, I'll need information on it to do so, but if that's the reality, if this is mistakes that he made, I would say move those over to us, keep the win with him, and then we'll see what else we find on top of that. It doesn't have to be decided today, it's just, that's how I would want to go about it, because I'm not.
Still covered on this,
That's right.
for more months, so I think we should be a little bit more, you know, do a little bit more introspective, looking at the policy of what the exclusions and inclusions are.
It sounds like that.
We're gonna spend money, let's get something for the money.
Are you saying, let's keep Kinsdale for another month while they check into things and not go to front line and quote us?
The front line's the
No,
problem.
front line's the win, I'm talking
I
about.
think all three are front line.
No, front line only rents property. 100%.
It's just one.
Yeah, whoever we have right now for the general liability coverage, the fire. Yeah, we got them. I'd love to get a refund if none of the stuff's covered. I mean, and I'm sure, I'm hoping that everything, that the things that are excluded, they're included. I'm not worried about somebody coming up. I hope nobody comes in here with any options. You know, I mean, just, you never know, but,
Yeah.
but all the other liability issues, like if somebody's in the parking lot or something happened, you know, a vagrant beat somebody up in the parking lot, who was just a friend visiting any of these people, and they turn around with the deep pockets, and so they're on our property, they got beat up on our property, I mean, they're gonna come after us, right? I mean,
Absolutely.
any smart attorney on that, you know, Morgan & Morgan didn't get that big by being stupid, they go with pockets on. So I would wanna have as much coverage as possible without that many exclusions. I would. Yeah, I mean. I would want them to. I would want them to put together a policy. Absolutely.
Yeah.
Can you do it?
I mean, we're gonna need some information on it, so yeah, I mean,
We'll give you all the information you want. That guy right there. That's the keeper of the information. But, I mean, I would, yeah. I would. The last thing that I, as a board member, want to do is have to go and say to a neighbor, hey, this happened, and I just looked at our policy. We're not covered, well, then,
Yeah, we need time to look at.
Yeah.
The things before we accept anything anyway,
I agree.
so that would give time for them to go ahead and get theirs.
And frankly, I think, you know, I know it may cost a few bucks, but I think that the attorney could look over, you know, real estate attorney is gonna be familiar with what should be done, shouldn't be done.
and we send them that right there, illustrates it, shows it.
Yeah, I mean, but I agree. So, yeah, let's do it. Let's do it.
Anything me.
Okay. Yes. a lot of good lost runs. I mean, your agent has them right now, so we can get this pretty quickly, so. But,
There are no losses the last 2 years.
I know they're still gonna be the lost runs, but if you didn't have losses the past 3 years, then why are you at Kinsale?
That's a good question. Find out.
Question.
We had one claim that was in reserves that was removed.
Okay.
That's the reason why we were with Kinsale.
We had for 3 years.
All right, well, we'll figure out a game plan on it and appreciate everyone's time and
Is your contact information in here?
yeah, I don't know.
Just to answer the question on what happens after Kinsale, the quote that Mike has put together, Westchester is for liability
Okay.
and Wilshire for property without wind.
Mhm.
So the makeup was Westchester, Wilshire, and then Frontline for the wind.
Okay.
What percentage increase? Cost to go from 19 to 32 million, that's 13 million increase. But say you had a $50,000 liability, what would the difference be between 13 just in liability?
Well, that's gonna relate to the appraisal.
Well, the appraisal is 19, but I'm just saying, if it was up to 32, and we had a $50,000 liability coverage, what would be the difference in liability on that 13 million?
Well, nothing, your liability policy is $1 million occurrence, $2 million aggregate. It's not gonna relate to the appraisal itself.
It would be no more than 19 million than it would be at 32.
Well, your property will. Your property is gonna be 50+%.
Oh, the cost would be $20,000 a year, is the difference between the 19 and 31.
It's 20,000.
Yes, yes, that's the point.
$1 million is incident of an aggregate.
$1 million occurrence and $2 million aggregate. So you have 2 split trip balls that touch $1 million each, and then that would tap out the general liability. If you have an umbrella that goes over that, that essentially would be the next layer of defense.
The umbrella would be 15 million.
Okay.
Who do we pay for that?
We pay $8,002
You know,
for the umbrella.
you know, it's with.
I do not.
Because if you put, yeah,
I don't, live in my own home. My house. And so it's cheaper than that, but I don't have that.
yeah. But it depends.
It's a condo.
Yeah, well, yeah, that's kind of the commercial risk, but I would just make sure the umbrella goes over the directors and officers as well, because some do and some don't. You know, but the appraisal value is going down. I mean, obviously, just mentioned it that, you know, like, I mean, heaven forbid, if there was a total loss, I can confidently say it, billing for $100 and $27 per foot, it's a lot not gonna happen. You can't build a frame house for that right now. So I don't know how that appraisal company did it. It works out to your advantage, don't get me wrong. But I just would mention that the values themselves, it, you know.
So it was 32 million, it would cost us 3 million. Go to that 13 million. I mean, 20,000.
Not on the liability. The liability is unrelated to the property. Someone said that the appraisal brought your general liability down, and that it only brought your property down. Where are we getting? Who said that there was 20 grand less in general liability? Oh, property. I got you. Okay. Okay.
So the property insurance at 19 million is. What's the difference?
50% less. I mean, because you're going up to 32. I mean, that's
Between 19 and 32.
Yeah. I mean,
essentially
It's-
roughly 50%.
And now we're paying $39,000.
That's on the wind. Okay, gotcha. Yeah. Well, that's just from the property's going, the value's going down.
Everybody had 20,000.
Basically,
So we went back, I see 20, if it. if a wave came in and took it into the river, you know, it would be better to have it up there because the increase in that rate.
Yeah, we have some total loss, yeah.
But I'm just saying it can happen, because the only thing that affects us really with the deductible is.
Good time. Well, yes, yeah.
I mean, we can't get coverage because with the percentage based on, the value of the property, the deductible is such that they gotta blow all the roofs off. Twice to get inside the deductible. There's
That's that, then the $1 million deductible, the money was eight hundred.
Mhm.
565.
Mhm.
I mean.
Yeah, I mean, you look at that,
The
Well,
rules
that's
that
true.
happen, but the point is.
I know, yeah, it's unless you're buying a parametric policy. Is that ever mentioned to you all, like those ones that if you buy something where the wind hits a certain amount, you get X amount? Another way, like, not primary, but, you know, winds are 100 miles an hour for 60 seconds, you get 500,000, whether you get a loss or not. So, a way to, some associations, yeah, it's different. Like I said, all some ideas on that, but. Anyway, I know you all have a lot going on, you know, so any questions you all have, let me know, appreciate everyone's time. And, we'll go from there. We want this to work.
Yeah, yeah, let's have it. Yeah, go on.
Well, thank you.
Yeah, no worries.
So you'll be in touch with me?
Yeah.
Thank you.
Does it, appreciate it. You can go through. Okay. Want to go through? Yeah.
Can you stay a minute?
Yeah, I'm actually gonna do, just a synopsis of the insurance committee's report, and the whole thing, of course. Okay, so with the insurance committee, there was basically two things that we were looking at. One of them was, of course, who will be our insurance broker from this point going forward. And with that, looking at all of our insurance policies and seeing, you know, getting a good understanding of what's going on, which talking to all three of them, they all had something a little bit different, but a lot of them the same thing, like him and USI agreed on a lot of factors, especially our liability. And then of course, the other thing looking at is the wind insurance and what that means for all of us. And so those are the two things. After looking at the decisions that we're going to make of the wind and who we're going to continue with, I would very much say that the policy needs to be thoroughly looked at. The exclusions, you can't just say we're taking this quote and going with it. We have to actually read it, look at it, and like I said, maybe even have an attorney or somebody else look it over that's even more knowledgeable than us. And then also, of course, how are we paying for it and how that affects people. So the insurance committee's recommendations are the following. Policies to be read ahead of time before making payment. As we talked about, things that have a lot of exclusions. We need to make sure our exclusions are good in all of our policies and that the companies are also good companies to continue with. Each premium needs to be in a separate line item on the budget. Really how all grouped together, except for some reason why it's being taken out of reserves every year instead of a line item in the budget. Also, recommendation is when we're getting new appraisals immediately after there's a raise in value, and look at it at that time because we may have this in previous years. The recommendation is the independent committee for all insurance needs. So have an actual independent committee, whether it's us or somebody else, but it needs more time put into it. And the committee, I think, is the only way to do that. We also recommend going with a larger insurance broker. They have more access to insurance carrier. They have better pricing. Sometimes they can get their commissions a little bit different, or commissions in total need to be looked at. We also, the insurance committee looking at everything, recommend don't get a windstorm coverage. It's $1 million deductible. Our roof was $565,000. We can never make a claim. We have never made a claim. There are 12 separate roofs going 3 different directions. So it would have to be 12 separate roofs going off at all the same time twice. $35,000 in damage in 1 year is the most that we've ever had. We recommend putting it in a dedicated fund that earns interest that is only for windstorm coverage, which again would be good because we just a couple years ago had to pay an assessment for hurricane damage to people's windows and so on and so forth. So that can grow interest and also maybe cover that aspect of it. And also can also be used to show that we have a dedicated fund to people who are trying to sell their homes, they can show it to their mortgage lenders and use it in that regard. Yearly assessments, it has to be looked at, or raising the HOAs, whichever one would be the happen if we do that. And that is the synopsis. I've given them a much broader and bigger report than this, but I just wanted to go over it main points. Yes.
The state wants us to have wind insurance.
It's required.
This is required.
There's, I mean, it's up for debate whether it's required. It really depends who you ask. By state law, it says you must have property insurance. If you say wind is property insurance, then you really need to have like earth insurance, which most lenders actually require, and all insurance, if you look at that in that way, sinkhole insurance, so on and so forth. And then it also states best efforts. So it's really wobbly out there, and even talking some of the stuff from the association attorney, there hasn't been anybody that the only way to go after, let's say they didn't get it and they were going to go after the board. The board would have to be proven that they did something unlawfully for themselves, that they benefited personally, or they scammed money away, or something in that disregard. Not just that best decision, the best efforts might have been, instead of bankrupting this building and not getting no coverage, that the best efforts was there was no coverage to get because it doesn't cover anything. So it's an iffy area, and it depends which way you look at it. In all reality,
We're gonna get penalized if we do not have it.
we haven't had it for a year. We haven't been penalized. Like there's no penalties coming from the state or government or anything like that. No.
We paid for a legal opinion from Holly. She did a multiple in-depth report on it. It was about 20 pages. Basically, the summary came down to, in basically some same words, that yes, it is required. You cannot say that the reason why we did not get wind is because it cost too much. That's not a reason to say. If it wasn't available, then you can't get it. But
It was available. It's always been available.
Would it be 300,000, 350,000? Because right now, the history of this place, with the roof structure and the way it's laid out, we're impervious to wind damage, especially any severe wind damage. We've got 3 buildings with 3 different exposures, with each roof having 4 different sections. Most of them being 45% on the building with 25% and 5%. It's impossible. In 23 years that I've been here, we've had 3 damages. One on the east end of the south building, which was the latest, which was it's a 25% section, which is $30,000. Then we had in 2005 or 6, whatever it is, we had the west end of the south building, and that's a $30,000. And then we had the the elevator shaft on the west building, which is a 5%, which was about 6 or 7,000. So during all this time, we've had, since I've been here, we paid $690,000 in premiums, and that's based on $30,000 a year, $690,000, and we've had $70,000 worth of claims, and we paid for it.
We've not claimed damage.
Yeah, I mean, but
We've never had a claim.
no, we were not able to.
Yeah, that was my point.
By the thought, we also pay liability costs of 27,000, and property costs 44,000, but we had no claims at all. Yeah, so I mean,
That's what you continue to think. These things will cost no more. To replace all the roofs.
I hear you. But
Quite a difference between the two.
well, the wind is off. Based on what, Mike said before. The wind covered everybody. The work is and you don't have the whole shooting match.
The doors are broken.
We understand that, but what the history is, in other words, you want to pay $70,000, give them $70,000 when there's no way that we're going to be able to turn in claim. I think the owners want to pay $70,000 a year. And then
I have an issue. If I'm on board, you're on the board. Let's just put me on the board and you're not on the board. And we have a major damage and it blows in the door, entry side doors to your place, floods your hallway, floods into your place. And it's all from hurricane. And we didn't have coverage and now it's gonna come out of your pocket. Didn't blow the roof off, it just knocked the shit out of all.
We would never have over $1 million for damage, because anytime it would be your personal responsibility.
But no, but if it blows out his windows and his sliding glass doors and stuff,
It's still not gonna come up to $1 million of damage.
right, so we're all gonna have to chip in.
Again, right. Yeah,
The point is, you're gonna,
yeah.
this is about me, work for not having had insurance.
Right.
If it's $1 million of damage,
A responsible way to manage property.
Right.
You insure it.
They do.
well, you insure an asset. Winds are not going to blow off. There's a lot of cost.
Look,
And then we've got $200,000, a total of $600,000 worth of exposure. That includes all the windows and the roof. And we're going to pay $70,000 hopefully.
We have two issues though. One is, I have been told previously that if the board members don't get the insurance, that they can be sued and be personally liable.
Yeah.
And we need to check that out with our
Well, they
attorney.
did. They went and paid Cobb and Cole several $1,000s to research it. And the only thing they came up with was best effort as a low bar to get it. And plus the fact is, they asked for a homeowner, and I think our board members would be obligated if something happened. And the thing being is they were never once, one case law put out there except everything else is that you've done the best with what's best for the condominium.
I'll give you others to that.
well, I'll give you a copy of the letter from the attorney, but you cannot be personally liable. You cannot, like, your money would never come out of your pocket. You cannot be personal liable. And I'll give you a copy, I think I even have it on me, from the attorney saying that you personally cannot be personally liable for it.
The other thing is the wording in our declaration of condominium.
It's from time to time.
So how are we going to determine when is the time to have it and when is the time to not have it?
Well, let's put it this way, you didn't just have it for a year. There was insurance available. It was at a large amount.
Well, that
It would have cost a lot, because there was insurance available. If you were legally supposed to have it, then you should have, we should already have it.
Well, then I think.
Well-
We get to that way, as many people as I talk to that, look, you and I sit and talked about this thing, if you owned all 128 units, would you have went out and paid $217,000? We have no coverage. And you, and I think you said at the same time, which I said, yeah, if I own the whole thing, and my thing, everybody that I've talked to says now, let's vote on it. Cause it's gonna be a major thing now.
Then I think you have to take another step too, what you have to then do to build a reserve. In other words, when you're not paying for the premium, to go into premiums. I think what you need to do is have what they call board reserve funds, which is just a segregated amount of money that can only be used for one specific.
Yeah, yeah.
Okay, and I think that what you need to do is you just need to start collecting a little bit each year. You go into a roof reserve.
I
fund.
agree.
If the elevator breaks, you don't take it out of the roof reserve fund. When you get the roof reserve funds to pretty close to what they need to be to replace, you just let that money sit there and accumulate at 4.5% in the bank. And when the elevator goes up, you do not mess with that money. That money is strictly reserved because we know that we have a problem with the roof. And if we don't have one for 20 years and it's accumulating at 4%, and it's $500,000 in there, in 20 years, it'll be almost $17,000, $170,000. With 500.
Wonderful idea. There also needs to be discussed and it needs to be in the letter, we're gonna vote on it. You offered to get us a list of the mortgage.
Yes, I put some of them in there, and now we'll get, from current, saying that they'll currently also, because these are ones that we are current owners now that have mortgages that do not require liens. And there's a list of them, I can even give you a bigger list, but I'll go and I'll see if I can get them in their current dates. You know what I mean? Saying, here, we will process the loans without the lending coverage. Yeah. That's just something I can
Based
work
on
on.
the fact that we
Yeah.
may have our, roof reserve.
Yeah, yeah. Yes, they would want to, at least one I think I talked to, they want a dedicated fund. Because then, for instance, because that's all they're worried about. Right now, you having insurance does not cover your unit. If there's something happens, with the $1 million deductible, the mortgage company isn't getting any money back for it. So they just want to make sure that we're covered. That,
Reserve fund. So
Yeah.
Reserve fund takes the place of no concern. The bank or mortgage.
yeah.
So, but we need to know which mortgage companies will accept that and which won't.
Yes, yes, I can definitely work on that. That's not a problem. And this sounds like, and even if we get it, there's not a rush, and we're not gonna, through this hurricane season, or the next month or whatever, or even next 3 months, it's still not gonna cover anything. So that would give the time to me to talk to the banks and get that, and the time to make a designated fund.
I didn't say that before, I'm not sure what you mean, because once we sign the papers and pay the money, the policy's active.
Right, I'm saying, don't wait, first of all, we need to look at the policies anyways, before we just go ahead and sign anything.
Right.
But two, if we have to wait a couple of months or 3 months or whatever amount of time to get the wind coverage. It's not a rush to get the wind coverage. We haven't had it in a year. It's not gonna cover anything, so if it took a little bit longer so we can do our real due diligence and get the mortgage company, get the account and go that direction, I don't see how it's gonna hurt anything.
Well,
So look at the direction we're going in at this point. Of going that route, and as far as the banks go, there is banks out there that will win. And my thing is, I just gotta get it right, that's another thing, I actually thought, and then, if somebody comes up that right now with a bank that doesn't do it, I think we could go in and talk to them and just say, hey, everything is out of filter with it anymore. No, not
No. I understand what you're saying. It makes sense. It's practical. That's why it's probably not gonna work that way because Wells Fargo Bank are not dictated by what the local branch manager says, even if he thinks you're the nicest guy. They've got corporate rules that just those are the.
Well, let's just say that particular bank, but there is banks out there that we could negotiate with if we have a reserve. If we take it and say, hey, here's everything balanced. We have $400,000. Now, you want us to pay $70,000 a month, and you will put this $400,000 in your bank. And if we don't have a claim, it stays there. If we have a claim, I mean, if we pay the insurance company, we lose the $70,000. I mean, here's the way it really boils down to, is we got $70,000. Let's take $70,000 and put it in the bank. And pray that we don't have a claim. If we don't have a claim, we got 70,000 sitting in the bank. Now let's go the other route and say, okay, we're gonna give the insurance company $70,000. We're gonna pray that we don't have any damages, because if we have damages, we not only lost the 70,000, now we gotta go to the reserve.
I totally hear you. We have to go, getting the money out of some people wasn't really fun. And I'm just telling you, some people were nice about it. Some people were a royal pain in the butt. And, this may be recorded, so I'm not. So, but the point was, most people said, this is my home and I need to take care of it. They haven't had a fiscal responsibility over and above their HOA dues for a long time. And it's sad, but that's what happens. Wear and tear. It's natural. Well, everything wears out. The washing machine wear out. The elevators wear out. The point is, we have to make the commitment that if we don't, and this has to go to all the here, but if we don't make a commitment, it's imperative. That's you're talking about. What that premium is, we do that now, but we also do it next year. In other words, up until the point where we put away enough in reserve to make the payment. Because if the roofs blow off again, or have to be hidden for whatever reason, the money needs to be there so we can expedite what needs to be done. We don't need to be spending people like me to knock on doors and I didn't grovel, but I did get pissed off on occasion. Because I didn't like the response. It was not reasonable. It wasn't communal. And this is a community property. So, sure. Go ahead.
Condominium docs say that we have to have insurance. That's number one. So if you decide not to have it, because it makes some good points. You'll have to go through the whole order of all the owners and get their vote on that we don't have, because the condo doc says we have.
Well, that's a way to hear back from time to time and lower thing on it.
I'm not.
Multiple, not just statutory, they're the future.
The others they don't want the premiums. They you can amend the documents, but once you pay the insurance company and you charge them, they can't get it back. What I'm trying to say is that everything is good. You may not say it. I'm shocked. But anyway,
Thanks a lot.
you're welcome.
I feel it.
Every time. No, really, you did it. You made a lot of space because you have life insurance. Why do you carry life insurance? You better go die. You're not going to die. You have life insurance, right? And I have life insurance. So I'm betting, okay, that I'm going to die. But that premium is reasonable to what you're looking at. I mean, right now, that's the fixed cost of it. Oh, yeah, it's a fixed cost of it. They want $70,000, or to get $70,000 just to say they have wind coverage. So if anything damaged, we still got to pay for it. Makes a lot of stuff. I'm just trying to say that.
Decide how to proceed from here.
Okay.
This guy, go up there.
We continue.
Yeah,
Let's say I want to sell my condo, he comes over, he wants to buy my condo, he has the loan already. And he said, wait a minute, you don't have money insurance, you can't get it, so what do I do then? What do you do? Come on.
Special way. Special.
give me a second, Joanne.
I'm not gonna.
I-
Mark has a comment
I
to
didn't-
make. Mark has a comment to make.
Um, Uh, I'm just stating what 718 has and the insurance law. That's all I'm saying. Yeah, statute 718. Self-insured. There's not a single condominium that meets the requirements in 718 that has been able to do a self-insured. Because the amount of reserves that you need to have is incredible. So you can do what you want to do and put 70,000 away if you like, but it does not fit into 718 as far as being self-insured. That's all that's all I'm saying there.
I have a question.
Yeah. Yeah. Yeah.
We need to talk about how to proceed from here. We've pretty much covered all there is to talk about that we know. And we know there's disagreements and there's different options. We need to talk about proceed.
The other couple things, Macon, and I'll stop. Let's go back to the sale of unit 421. He could not, the buyer, and went through everything to try and find a loan, could not get a loan because we didn't have wind. Whereas last year, loans were slipping through rather easy, but as time went on and banks caught on that hey, we got to make sure these places got wind coverage, and that's what happened. That's why all of a sudden all the sales had to be cash. Now in that instance, he was ready to sue us because he cited that, hey, this condo is required to have wind coverage. Hey, I'm reading it here in 718. They don't have it. It's in their docs that they have it. They don't. He said, I've got a really good case against the Bel Air Condominium Association because you guys don't have wind coverage and I can't sell my unit because no one can get a loan. Well, and I get that. And what he did to solve the problem, he ended up having to self-finance the deal. And whenever Bel Air got wind, then the homeowner could get conventional financing, and then he could get off the hook for actually financing the sale himself because he didn't want to do that, but he had to do that to sell the unit. So that's an issue there.
Because we couldn't get financing because we didn't have wind insurance.
Yeah.
That's two that happened this year.
Yeah. So the door is, I guess the word is open, that someone could take the association to court on us not doing these statute things and condo doc requirements. I mean, that's a possibility. I'm not saying it's going to happen. I'm just saying it's a possibility because we have not followed the rules by the state and our condo docs. Now, with the that's absolutely true. I'm just pointing out 718 issues. That's all. The other thing, it sounds like you guys want some time to decide on things. It sounds like you need like 30 days.
Yes.
So I've been texting here with Mike, and what we can do is this. I mean, he said, go ahead and grab the wind, but that's your call, obviously. But he said that was a deal on the wind.
Mm-hmm.
Now, on X-Wind and liability, we can hang on another month with Kinsale. It's obviously more cost than what the front line was going to be because we had some savings there, huge. That was going to pay off some things, and we wouldn't have to have a special assessment to pay for having all three coverages. Liability.
Front line was only for the wind.
That's correct. There were two other carriers. It was Mike.
We have Westchester and Wilshire.
Yeah, thank you. Yeah. So, but the door is open if you want to not pick up these two policies for the liability and X-Wind for another 30 days, and you guys can put it to study and see what you want to do. Mike can do that.
Mark, may I ask a question of the insurance committee?
Sure.
Okay, if Polly and
Yes.
Bobby are there, I have a question for them. I don't know, can you all hear me okay? Can everybody hear me all right?
They're listening.
They're listening.
Okay, I have a scenario for the insurance committee that I have a question about. So I understand completely the concept of not having to have wind coverage for damages because of the amount of deductible and also the premiums that we would be saving, which we could bank. And I understand that scenario. I have a question for you. In the instance where what might happen would be we have a hurricane or windstorm, a unit gets damaged because of that, a window blows out in a unit, but also someone in that unit gets injured at the same time. Now, would that person be able to sue the association because we didn't get the wind coverage? And what would the amount be? For example, could we look at maybe a $10 million suit against the association if somebody got injured?
Injury, as far as I know, injury would be under our liability, it wouldn't be under the windstorm. The windstorm covers the roof and the windows, it's not covering injuries. And then
Okay, so
anything
then-
that got damaged inside of their unit would be not the association, it would be the homeowner's duties to pay to fix it.
But he's not talking
Okay.
about, he's not talking about damaging the refrigerator and the cabinets. He's talking about the wind blowing, the window being blown out, which it's happening during the storm. And the glass comes across and cuts somebody up bad. That's not a liability issue. You don't get liability from the door. Because that's part of the storm itself.
As far as I know, I'm pretty sure, I wish we had this question when they're here, it doesn't cover injuries, the windstorm. The policy doesn't cover any
But the
injuries.
liability covers injuries, but not, I don't think it's tied in with the storm. It's just kind of like flood insurance only works if you have standing water that came up, right? I mean,
Mhm.
it's not.
Someone fell because it was flooded out there.
That's the liability.
Right, it's the same thing.
But he's asking about based on your own house.
Yeah, it would either be your own or it would be under liability. Flood doesn't cover
If you have.
injuries.
You have contents insurance, you also have some liability.
Yeah.
coverage.
Yeah.
So you have your own liability
And my-
coverage on your homeowner's
Yeah.
internal policy.
My concern is that that the injury would be caused due to wind damage. And so is there a case for a unit owner to make a lawsuit based on the fact that it was the wind damage that caused the injury? But so you say there's no liability that.
We can
uh,
double
to
check,
the-
but
to
I
the-
would write the policy pretty good, I think. So as far as I'm like 80% sure that it doesn't cover any injuries. The windstorm doesn't cover injuries,
Well,
Okay, thank
Rick,
you.
we'll get that answer.
but we can double check, yeah. That's it.
I gotta go.
Thank you.
Okay.
Accomplish something, so if y'all need me.
Regardless, you did a good job.
Thank you guys for doing the research that you did. It's very helpful in bringing them here. Kind of opened our eyes up to what we do have, what we don't have, what we should have. I appreciate the time and effort you put into doing that.
Thank you.
Anytime.
Thank you.
We do know that you put a lot of time and effort
Thank you.
No, now you don't.
in.
All right. I have another new business issue that I want to address in a minute too, but we've got to wrap this up. As far as, I think I would like to have Mike Moore actually honestly explain to us, based on this analysis, to either dispute it or explain to us
Sure.
why it doesn't mean
And,
serious.
and that's why I'm saying, and that's the reason why I talked or texted with him, that we can give ourselves 30 days to study this, and
Right.
we can get Mike on the phone and
Well, first thing I think I would appreciate if you could scan this thing in, take the binder off, scan it in.
Yeah. I did it.
Shoot it over to Mike. I mean,
Yeah.
these guys don't mind,
Yeah.
and whether anybody mind, and I don't care, we have a responsibility here,
Yeah,
I want Mike to be able to explain why these exclusions that are highlighted in yellow are in there, why was it not important enough?
Well,
To have-
so the other thing, where he was comparing to the Kinsale, which we knew was not the greatest of things.
Well,
To get,
frankly,
because of where we were. But,
Give numbers, we could also for, because they said that they could, get a different company than Grant County and still get the same price, so we have that also.
but you can think, what up?
If you don't have one, it didn't come.
Yeah.
Yeah, so they don't need the price with another company, so we can have that also, I have mine, all three big numbers.
And it would be nice, because also, most people probably won't realize it. But the issue of being admitted, I understand the value of that. We had an insurance company in the state of Florida years ago that went out of business, a life insurance company. And everybody lost their butt. Everybody did that. Any policy, cash value, everything's gone. Now, in order to practice insurance in the state of Florida, there are some companies
Looks like they should know shut off. Scott, you're the host.
I don't know why.
Well, you're doing a great job.
Listening.
All right. Okay, I guess that means the meeting's over. Obviously, they shut it off. Few little bugs to work out yet, but everything's pretty good. I think they just need somebody watching the video so they can see if we have a reaction or we have a
Yeah.
question. That's a good thing to do, right?
Yeah,
Yeah.
but I don't think it was over.
No, I don't know what happened. It may be that he lost the connection. He was having bandwidth issues all along. That's why it was so choppy.
Alrighty,
So
I'll call
he was
the
using-
number and find out what's going on.
Yeah, okay.
Alrighty, take care.
Bye now.
Okay.
Bye.
Bye.